Welcome to the Real Estate Show on KMED. February the 4th is our date. Pete Belcaster and Joe Brett, the real estate guys, with you here today. And thanks for joining us on AM 1440 and all the FM stations now that make up KMED across Jackson and Josephine counties, by the way. So it's always great to add more people to our show. Joe, now in coming up on 8 years this summer. Yeah, pretty good.
It's good that we've expanded our horizons on the airwaves into Josephine County, because we're looking at properties up there and helping people with some options and choices up there, and it's our whole regional network that kind of ties together through all of that. So we're good to have them aboard.
Well, look how Jackson, Josephine counties are so tied together in so many ways, and it's great to be able to go there with the radio station too. So anyway, thank you for joining us here today. Well, Don McCoy, who's a real estate broker with John L. Scott, and is in the house with us today here at KMED. And well, first of all, Don, a Happy New Year. It's 2017, even though it's February the 4th. It's nice to have you. How you doing?
Well, great, Pete. It's so good to have you here, and I just appreciate you inviting me and helping you get through this hour.
Yeah, every seems like every once in a while. We call on Don, who has experience in many things, including real estate, and it's amazing what's happened. I mean, look how long you talk about bull runs, the bull market in stock markets, and I don't know what we call it in real estate, but that's looking at it's really something that we've seen the last few years, hasn't it?
It really has. In fact, one of the hottest, coolest statistics just came off the press.
Yeah.
Ready for that?
National Association of Realtors, I assume. Okay.
That's right. Sales are at their highest pace in 10 years since 2006. We're right back up where we were.
Yeah.
Isn't that something?
Total number of sales.
Yeah.
Total number of sales. Yeah.
Yeah. Across the country.
Across the country. Well, we've hit that period here. I think, and we've certainly hit that the valuations, when so many people, right after that 2007 statistic, so many people, lost value, and Oregonians have come back pretty darn high with over 96%, of people in homes above water.
That's right.
In other words, your place is worth more than what you owe on it.
That's right.
Yeah.
People really ought to take a good look at that. The thing is that a lot of folks have a bad taste in their mouth from what happened, and they're just nervous about real estate, and they never want to have that happen to them again. But just like any other risk in life, there's a day where we got to face the music one more time. Now's the best time ever. The interest rates are still low, and it's a great seller's market out there.
What do you think the biggest issue? I mean, right now, as we go into the spring season is coming, and remember, Joe and I always like to tell people, the three busiest real estate months of the year generally are that March, April, May period in there, and they're coming up.
I'll tell you what the biggest issue is. Replacement property.
Okay.
Yeah. Where in the world are they going to move? They hopefully move up, or maybe downsize. They have to. They've reached that time in life where it's time to downsize, but maybe move up. But where's the inventory? And so it is truly a seller's market, as long as you can, make the appraiser happy.
Well, it is. I'd say probably. I agree with you there that
or cash it out.
Yeah. Well, I don't know what's going to happen because we don't have the inventory is at a low. I mean, it's less than 1,000. Less than 1,000 properties are on the market. I mean, it's almost under 900 really. So it's that low, and they're not being replaced, and we still have high demand. You still see that in your world? I mean,
I do.
Do you do?
Yeah, we're taking less listings compared to a year ago, but our sales are higher than a year ago.
Right.
So
that's got to end at some point.
That's right.
The math just can't sustain itself.
Yeah, there'll be a trajectory of day of reckoning coming right up.
Well, just if you looked at for the last year of 2016. Which was a big year. 2015 and 2016, I think, were pretty comparable. I mean, there were a few more properties sold in 2016 than prior to that, but almost 2,600 of them. But that's a lot. That's a lot. Our median price for the year has gone up to $239,000, up from $225,000, up from $147,000 in 2011. That's concerning. I mean, that's a pretty good. That's a big jump. I'm worried about that.
Yeah. Well, I think people need to dive in if they have the least bit interest in real estate. It's really the best time this year, as we keep hearing, and most likely because our market is improving across the country, we're going to have a raise in interest rates, possibly as many as 3. And this year, it could get up closer between 5 and 6%. And so buying now, when it's right around 4%, 4.25% maybe at the most right now.
See, well,
we've not got to move.
Go ahead.
What's going to happen now? And the projections for Medford by 2025 to grow by like 20%. That's where the next bottleneck is going to come. We've got barely enough inventory to sustain our local market right now, and we've got people that are moving, and there are opportunities that are coming to our region, and they're only going to grow. How are we ever going to keep up? Where are those people going to live that are going to move here that we know are on the way?
I know it.
Well, we have an issue with low rental vacancy. Mm-hmm. We did a show, Don, right after right at the beginning of last year with Daniel Perry from airhop.com, which is the Airbnb part of what's happening in our region. People taking rentals out and putting them in as Airbnb places and things like that. The housing crisis. I was with some investors this week regarding the Medford Elks building, and they're from out of town, from the Portland area. And they're asking, I'm telling you, these people are very aware of what's going on. They're asking about the real estate market here. What's it like? What is it going on? They ask a number of issues like that. And you say yourself like so ready, Joe. We're real estate brokers. You're like the front lines of people coming here, potential business people and everything. And you better have the right answers because they certainly want them because they're asking really, really good questions about the economy here. What's going on? What's the future like here? They know what's going on in Portland. It's crazy. They don't want to be up there.
Yep.
They're reaching out, maybe even to the rest of the state, which would be good.
That's right.
Portland is a housing market that is just poised to implode, it seems, and it's kind of starting to slow down, but they're having the same issues up there. Their rents are starting to price people right out of rental units, and even one of my colleagues down in Ashland came back from a weekend trip and had a $100 rent notice, increase in his rent notice. Mm-hmm. It's the third time now that's happened in the last 12 months. So, wow. I understand the need and the want to monetize your property, but my gosh, we're going to be putting people in a really hard place that can't afford anything or anywhere else.
We're with Don McCoy here today on the Real Estate Show from John L. Scott Market Watch Show. Pete and Joe with you here. If you look, I got into a discussion, I got an argument a little bit with another agent about rural properties right now. 2 years ago, Don, when we were talking, it was really a land rush going on. I mean, there was a ton of properties being sold. People were buying them they're going to grow, recreational marijuana on them. They're going to do all sorts of things. And it seemed like 2016 saw that come to at least not as crazy as it was. It has calmed down a lot. The statistics bear that out. Do you see that too, Don?
Yeah, I agree. There were a lot of people came flooding into the area and taking a look at what was going on. And the whole legal part of it was in such a flux that people were just got confused.
That was a crapshoot. Yeah, it was a crapshoot to buy those rural residential properties, especially in Jackson County.
And they got stung. A lot of people got stung by buying RR5, rural residential 5, thinking that they were going to be able to do it. Grow out in the open. You can do it in a greenhouse, but only it's so limited, and it's expensive. And so, as we know, exclusive farm use won out, and land was selling briskly. But a lot of the players have kind of scattered and run.
Well, if anything, certainly the number of rural properties sold decreased from the previous year in 2016. The one thing that did not decrease was the value.
Right.
I mean, the value has increased. It's the highest value that we have anywhere, in the counties, is the rural properties. The median price of $335,000. It's up from $225,000 a few years ago. So it slowed down in sales, but the value has increased.
But those numbers reflect that land rush that you talked about in 2015.
Yeah. All right. What about? This is the most interesting part of it. What we don't talk about distressed properties on our show very much, Don. I mean, we did. That's all we talked about in the beginning. I mean, it was like so much of the market. In 2016, what percent do you think were sold either foreclosed properties or short sale properties in the region?
I think less than 10.
Less than 10.
Maybe 8.
You're pretty close. It did. 90.3% of all sales were equity sales, normal sales. Okay. So it was just a little under 10%. Mm-hmm. That's still a big change from what it was a number of years ago. We barely talk about them. They're still out there, and they still come on the market. I know people look for those. And again, where I suggest you go if you want the FHA places, or go to homepath.com. You sign up there, they come on, and they come on every week. They're still out there, and you have to be able to pounce on them quickly, right? We all have experience trying to do that, because most of these foreclosed properties now, are they not? You have to. You're submitting offers online, right? Isn't that how it's done now? Everything is online to those.
Yep.
Yeah.
City of Medford, coincidentally on Thursday at their noon council meeting, put forth a little clearer picture of what their regulations are, and they are actively in the process now of going after those neglected and problem properties that have just languished and no one is taking responsibility for. The banking industry has been working with them on getting the intent of the ordinance just right, but yeah, they're actively now trying to get those blighted properties off or at least cleaned up for the neighbors and for the property values of the people around them. It's an issue that has been left of that years of those massive foreclosures, and some of those properties have really lingered kind of in just nowhere land.
They should get rid of them.
Yeah.
I mean, I don't know why the city or cities are so timid over it.
It's a hard process.
I mean,
Because you got to go through a process, but yeah, they are putting teeth into the ordinance now to take that forward and really clean up some of the messes that have been left behind.
Yeah, this rings a bell. I have a story to tell, in that last week I was able to take 6 or 7 real estate investors around looking at distressed properties. The majority of them were bank owned, and they were all low end, and they had an individual who flew in from outside the area
to look at them. Okay.
Yeah, and he was teaching them how to buy, low end properties, how much money it would take to fix them up. What an education that was to see that guy. And of course, he had a briefcase, and he was the expert. And he comes in from out of town, and everybody believed in the guy. Well, he hits a market here where the investor looking for the flipper. Okay, he's going to buy the fixer and flip it. He thinks he's going to make $10,000, $20,000, $30,000, and all these interesting things. We went and looked at, out of 10 properties, we were able to see 8 of them that day.
Okay.
And several of them were distressed, and almost every one of them would not work for what they wanted to do.
Really?
They wouldn't work because the condition of the property and the price of it, and it's bank owned. And so it was very challenging. And so the best scenario I have seen is when an investor has a contractor. He's a contractor, and he can put his own blood, sweat, and tears into that property,
into the remodel of
and
the
he
thing.
can basically get that property close to lot value, maybe a little over what the lot value would be, $65,000, $75,000, say. And every one of them were in Medford. Only one of them was condemned. And several others, we couldn't figure out why they weren't condemned. They were dangerous to walk into. And they just need to be taken off and put some duplexes in there, some multifamily housing.
I mean, if Medford is serious about, infill, they're talking about here, a lot of talking about that. Do you know how many places like that would be in this city that you could start and do and remake and add, again, additional dwelling units on them to get more value to your property? Heck, Daniel Perrigan is sitting in here where you are, saying that they feel that the way Uber has changed transportation.
Yeah.
He's telling us that Airbnbs are going to change the way real estate is evaluated in the future, based upon, do you have that ability to have that? Are you zoned right for it in some places? Do you have an additional dwelling unit? Do you put additional door into your place, etc.? And it makes some sense. There's over 400 units, right, available for rent in Jackson County right now. It's all changing.
Yep, it sure is.
It's really something. We have to get our new county assessor in here, since all this has changed, to talk about this, because, that's the person, that office is what sets all the values for taxes, for, real market values, etc. So we got to hear what they've got to say about this.
So, Don, those properties you were talking about, those investors looked at, those aren't going to be flippers. They would have to come in and put some more money into those in a long-term investment to do the duplex or whatever you could get away with the zoning for those. It's not just going to be the quick 6-month, $30,000 flip.
No.
Someone's going to have to come in with a long-term look at that and raise what Credit Property is on there right now and really refurbish it from the ground up.
Right, what you described, that window's closed. I mean, about a year and a half ago was the time to be doing that. And right now it's narrowing down who can actually accomplish that. And the prices are going up.
Mm-hmm.
We went what, 6.6% last year locally here in Jackson County. 6.6% increase in equity.
And if you're gonna just raise the place and build a little 2-bedroom back on there, get in line, because who's going to build it for you? Unless you can do it yourself, as you mentioned. If you got the crews and the subs and people lined up, because getting a house built right now is a challenge, and finding guys to do the remodels and some of the repairs is really part of the game right now. That's tricky.
Well, Rowe Community College has a big opportunity to really change that with their bond issue. We heard the president talk the other day, so I've got a really encouragement that may be beginning. We'll see if it changes or not, but because there are opportunities out there. One of the things that are out there also is our good friend Representative Sal Esquivel has been, proposing a sales tax that would eliminate the property tax. That has implications all over the place, doesn't it, for real estate? And Sal may or may not join us today, but we're going to talk about that with or without him.
He's a little busy right now.
When we come back on the Real Estate Show, we're with Don McCoy here. Don't forget you can check out all of our past shows at realestateshoworegon.com. We're coming right back to KMED after this. Welcome to the Real Estate Show. We continue here on KMED. It is February the 4th of 2018. Pete Belcaster and Joe Brett, the real estate guys, with you here today. And thanks for joining us on KMED throughout Jackson and Josephine County. We're with Don McCoy from John L. Scott here on our John L. Scott Market Watch show today. And it's always a fun time to get together, hear about the market, what's going on. And so far, I'll tell you, there's a lot happening, folks. And I agree with you, Don. It's going to continue right through spring as we get ready. The inventory remains low, but the demand is still high, and this is a supply and demand business. There's no question about that. Well, we were talking before we went to that break there that our good friend Representative Sal Esquivel, who by the way is the only real estate broker in the Oregon legislature, has been Sal for many years now. So Sal brings, of course, a great perspective and a great deal of respect from Salem about issues regarding real estate. So Sal, Don, you tell us what Sal has proposed, and he's on the phone with us here, and we're going to talk to him about it. So what is Sal doing now?
Well, I'm proud of Sal. I really am.
Exactly what I'm doing, Pete. I guess I thought you were asking.
Well, hang on just a second, Sal. We want Don to introduce what you're up to.
Let's do this.
Yeah, go ahead.
Yeah, it's hit the airwaves and the papers that you're proposing a 4.5% sales tax, which is going to affect us in a very positive way. I'm really familiar with this kind of an approach, and you're putting it into the Constitution. The state legislature agrees that it goes into the Constitution, and then it's by a vote of the people that allows it to stay in place, and not the state legislature. And I think that's powerful, beginning a nice, strong foundation, Sal. So,
hey, Pete, I've got to go. I can't hear a thing.
Oh, you can't hear us at all.
Can't hear a thing.
Gee, we can hear him, Joe. What are we doing here that's wrong? Gosh, I don't know, Sal. We got you all here. Well,
and I've got to testify on a bill.
Okay. Well, we got that. We done something wrong there. Can you hear us now at all? No.
Yeah, I can hear you, but I can't hear Don.
Oh, okay. Well, he was just telling us about what you were doing. So tell us a little bit about it, Sal. Can you just say what you're doing up there and how what kind of reaction did you get from it?
Actually, I've gotten very positive. I've gotten a few negatives because people don't read what I'm up to, what I propose. And first of all, remember that what I'm going to talk about now all goes in the Constitution. The people have to decide whether they want it or not, and they will vote on it if it goes that far. I want to propose a 4.5% sales tax in the Constitution that can be only moved by the people. I want to exclude clothing, food, and medical, as well as real estate transfer tax. I want to set up and allow and do a preemption of local government from adding on to that sales tax. And then I would like to set up and allow people with $500,000 or less on assessed value not to pay any property taxes, and that includes levies and bond measures. But from that day forth, they would go ahead and pay local bond levies and levies and bond measures. So, because otherwise everybody go out and bond everything.
Yeah.
So that what that does is it allows, and the money will go into a fund, and the fund will be paid back to the counties and the schools and whomever on this property tax. And then the excess monies will dump back out into the general fund, which we will earmarked for state police dedicated funding for the traffic division until they reached one trooper per 1,000 people of the national average, which today we're 49th out of 50, so we're almost dead last.
So Sal, what do you have to do something like that? I mean, for real estate people in real estate, something like that is a big thing, isn't it?
Well, for anyone on a fixed income, it's real big because, you have the necessities of life that, like food, clothing, medical, that are not taxed. So therefore, the only thing you're getting taxed on is luxury items.
And that brings in enough money, you think, to cover all the things that you're talking about, yes?
Well, actually, what we're doing is we're tapping into the drug money. We're tapping into the money that people are working under the table. We're tapping into tourism. And it's about 10 to 12% of our economy, maybe as much as 13% of our economy is going untaxed. So this would tap into that. And the first biennium, it makes about $1.5 billion more than it does today without costing the homeowner anything.
Wow. That's interesting, isn't that?
That's a sales tax. I think Oregonians who have been opposed to that, I think, would get behind that, given all of the well thought out details in that plan.
Yeah, Sal, Don here. I'm just really proud of you for putting this together, and it's nice it's coming from that side of the aisle because, you should be able to get some momentum and some handshakes from the other side of the aisle. And
I think we will, Don, and I'll tell you why. Because, we've always had, I think, 9 times we've tried sales tax in the state of Oregon. But first of all, it's never been in the Constitution. And second of all, they've always added on. They've never taken away a tax. This way, we're taking away your property taxes, and we're substituting and let the people that are working for a cash basis help foot the bill.
Do you treat individuals the same as corporations, or buying a business the same as individuals, and something like that?
Well, see, businesses, you take commercial, retail, warehouse space, you take investment properties, second homes. That will be taxed just as normal.
Okay. All right.
It's just your personal residence.
Just your personal residence would lose that thing. Well, that's how much money is that for us here in the room? I mean, think about that. The thing is, it's that 3%. Sal, it's that 3% property tax creep that's beginning to really kill people. I mean, that is beginning to be some serious money each year.
Well, and I've tied the $500,000 to the CPI index, so it'll go up with inflation. So it'll never remain at 500,000. It'll keep climbing.
Yeah. Well, all right. Well, look, we know you got a lot going on up there, so thanks for taking a few minutes with us.
And real quickly, Sal, it's Joe Brett.
I appreciate it, Pete.
Yeah.
Take care. Say hi to Joe.
Okay. All right. We'll do, Sal. Thanks. Always good to visit with him. I know he's a busy guy. He's represented a long time up there. Knows a lot of stuff.
Did I hear him right? This proposal would bring in $1.4 billion above what we're currently.
That's what he said, because the tax is in all of those. The things, the underground kind of economies and things like that. You're going to tap into
if I'm not incorrect, I think our deficit that we projected is about $1.6 billion of what we were trying to make up with the corporate tax that voters resoundingly voted down. So, gosh, there's some intrigue. I'd like to know more. I mean, just the first blush of what I've heard makes more sense than any kind of approach that we've had to this type of taxation.
Well, when you can offset
that's
the
it.
property
that's the one
taxes
thing they've never done,
and take the sales tax and let that take care of schools and public safety and libraries and concerns like that, and take that property tax away from people so they don't have that burden. They can stay in their homes
only
longer.
on your personal residence. Remember that part of it. So only on your personal residence.
Right.
Well, but that's significant.
You need a roof over your head.
$5,000, a year for me. For you,
not that much for me.
Thousands of dollars.
I'll probably pay more in sales tax, but I'll have a system in place that might provide for my state and for my schools and for my municipalities in a better way.
The one thing he does say is tourism is continuing to be a bigger part of our state. In Costa Rica, you pay a 13% sales tax on everything. Yep. Just the way it is. And so that's how they fund their things. So there are some merits in that. I don't think Sal brings that up lightly because, like you just say, from the Republican side of the aisle to bring that up is ballsy and gutsy to do. But, we got to stop. We got to start being able to do this together and come up with some solutions that make some sense around here because what we're doing is not actually working.
I like what he said in that it's a the first proposal for a sales tax in Oregon that will reduce taxes on the other end. Every one that we've had before us was the quick fix to fund all of our feel-good programs and things we could probably do without, but we fund anyway. But still, this really has some nuts and bolts that are very interesting.
Well, point of order on that. There was a 2% sales tax that was suggested in the state of Oregon back in the early 90s, and there was a huge push on that.
Yeah.
2%. And no other taxes. No property taxes, no state income taxes. Yeah, because I saw with my own eyes.
It wasn't in the Constitution. You could raise it at will. The legislature could raise it, right?
It was going to be part of the Constitution, just like this is. Okay. And it was going to be separate from the state legislature. It could only be handled by a voice of the people.
Yeah. You go to
how did that
too
do?
many.
It went down. By how much? It was
going to raise $4 billion a year.
You go to too many meetings.
We got
know that. You go to too many.
We have a PERS issue too that also needs to be factored in somehow. But
you just start talking about this stuff and listen to the passion that comes up. Everybody's got an opinion. Well, we wish Representative Sal well. The Real Estate Show continues right after this. The Real Estate Show rolls on KMED. February the 4th is our day here on AM 1440 and all that. Hey, next week on the show, we've had a wild, winter so far, and roofs and decks and things can be damaged, and if you don't take care of them, well, down the road, you got to replace them, right? Yeah, I know that. Anyway, next week, Better Build Construction. Werner Costanza is going to be here. These guys do some fabulous work and can tell us about what you can do to take care of your property. I just closed a wonderful deal with some wonderful people outside of Merlin, and we had issues of house issues, roof issues and flashing issues and snow issues, and I mean it was just a long drawn out thing. But the bottom line, you got to take care of your property. It's that great investment, and if you don't, you're going to pay for it. Either you pay for it as you go along, or you're going to pay for it at the end.
Pay for it all.
You pay for it all.
That's going to come right off your sales price.
Isn't
deferred maintenance.
Don, isn't that true? Isn't
That's
it?
right. The appraiser is going to look at the amenities of the property and what kind of condition.
Yeah. And if you need a house inspection, you're going to get all these things. And today, buyers, if they're paying a premium price, they're paying high prices. They're going to want these things, these repairs completed. And so that's always that warning, those pre-house inspection. Remember that show we did not very long ago with Dan Huckins and things like that?
For sellers,
So that's what I'm doing, at my house. I know it's going to get dinged. And so, I just spent how many thousands of dollars on the deck.
But it was worth it.
It's so beautiful.
Gosh.
I don't even walk on it now.
No, I wouldn't touch it. Nobody gets on there.
It's so beautiful. Anyway.
Just to look at.
Now, Don talking about what government can do. We just heard from Sal about, how that would affect, again, your personal residence if that property tax does go away. And there's another program I know that you were talking about that affects people. So these things do come down to us and in affect us in individual ways, correct?
That's right. 32% of home buyers last year were first-time home buyers. How about that? Almost a third of anybody that bought a home was first time.
That's a good sign.
Yeah, it's a good sign. We had a lot going on. And then on his way out the door, Obama had passed an executive order to throw another $500 on the average into the pot for a home buyer so that he could have, over the course of a year, a $500 break off of his loan through FHA. And then the first act that Trump did when he took office was to strike that.
Interesting. Okay.
Yeah.
All right.
So it never went into effect. Meanwhile, I was right in the middle of a transaction with a client.
Okay.
And he was first-time home buyer. It was a 203K loan, one of those I vowed I would never do again.
You must have really liked him.
It started 4.5 months ago, and here we are, still trying to close the deal. And in the middle of it, the lender came forward and he said, oh my gosh, we're going to get another $29, $30 a month off his loan with Obama's new program. So we adjusted to all that and got everything ready to go. And Trump came in and wiped the slate clean.
Okay,
All right. So his administration and the people around him, like Ben Carson running HUD now and running the housing department.
Right. They run the FHA program.
He said there's so much in it. We got to take time and really study it and see what it really is all about before we just allow this to go on.
Yeah.
And so talking around to lenders and to other realtors that are in the know about this, they're going, my gosh, if a guy can't afford, on the average, another $500 in a year. then he shouldn't be buying a house
in the first
And
place.
so what was the $500 about? It was to give him a break. At 500, maybe pre-qualify more people right on the edge, and that's where we got into trouble in the first place. And it would shortchange FHA's insurance program by not having that money come in, and that's part of what we got in trouble with originally, is there wasn't enough insurance money to come in and save the day. And so part of Ben Carson's concern and others is that that's shortfalling FHA and their insurance program on defaults. And so they just wiped it out for now until they can sit down and study it.
Well,
but it affected my guy.
Yeah, well, it certainly would.
He's got to give up pizza and beer.
For that amount. But you're right. I mean, that's little amounts, but you add them up over the course of the country and the tens of millions of things that go on. That's real money, right? I mean, it's 500 here, 500 there, and pretty soon you've got real money.
Yeah.
Well, it's interesting to see what's happening here. I wanted to say up in Josephine County also, they also had a really good year. The market between the two counties, and people always try to compare, well, what is Jackson County? How big of a market is Jackson County versus Josephine County in real estate? As we told you, there were 2,600 sales in Jackson County in 2016. In Josephine County, that was 667 sales, of which 500 of those were rural property sales. That was also down like it was in Jackson County. And 87.3% of the homes sold in Josephine County last year were regular sales. So they had a little bit higher, not much though, when you consider in terms of distressed properties. So
Josephine led some of that land rush in our region when first 2 years ago when we first started to kind of track that. So not unusual to see that's backed off a little bit.
We're going to see what 2017 brings here. As we know, Jim Remlin, who was here, our managing principal broker, he is really bullish on 2017 through 2018. They think it's going to continue. The demand is certainly there. It's not gone down. And remember, 40% of the sales here are from out of town people, not necessarily out of state, out of town people moving here. 40%, and that's a considerable figure. And that also means there's 60% of people who are in here either buying down. You're older, you got to get rid of your home, or you're moving up. And that's the market, and it's certainly not going to go down. Spring is the time. You're pretty optimistic, Don, that we're going to get more inventory. Everybody seems to be saying that.
Because Pete's got a new deck, and he's ready to go on the market this spring.
Yeah, it hasn't materialized yet. So I tell people, look, if you want to you better do it now because you have less competition than you're going to have in May, believing that there's going to be more inventory come up. Do you think there's going to be more?
Well, of course, people are going to come along, but I think we're going to continue to just always be starving for enough listings. And so it's going to hold our prices up.
It's going to keep the price.
Foreseeable future.
It's going to keep our values up. And until we get a plethora of properties on the market again, and then people will get competitive and start bringing them down. But I don't see that happening for another year or two.
A lot of the properties that are coming on are 350 and above.
That's
right.
The
new homes
I'm involved in 2 different apartment project programs, trying to build apartments and get it going. Well, the value of the land is so high for multifamily housing land and the locations that they are, that the poor builder is really sharpening his pencil, and the investors are really looking at it very, very carefully to see if it's going to actually pencil and work out as far as apartments and rentals go.
God,
and I hope it happens because we need it.
We need them so bad, yeah.
Is it regulation doing it, or just the supply and demand of land?
The sellers are demanding what they think the going rate is and what the comps are in the community. And they're holding out for the top dollar, just like you and I would do.
They've been sitting on that dirt for a long time and through some hard times, too, and now they're going to get everything they can.
Well, we didn't solve all the problems of the real estate industry around today, but we did tell you there's a lot going on.
Wow.
And the market is robust, so we do know that. So thanks, Don, for being here.
Good job, Don.
See you soon. Joe as well.
Too,
That'll
Brad.
do it for the Real Estate Show here on KMED for February the 4th. You have a great week, everybody. God bless you all, and we'll see you next weekend right back here on KMED. Be sure to check us out at realestateshoworegon.com.
You've been listening to the Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshoworegon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.